32,000 contracts. That's how many FIs covered yesterday in one session. Biggest single day unwind we have seen all this season. And they are still short 2,27,400 contracts. Today's Sensex expiry, the straddle is pricing around 1,000 points movement, and Gift Nifty is barely down 94 points from yesterday's monster close. So the question is, was yesterday's the squeeze or was it the beginning of the squeeze? So this is Tanmay's Edge, India's pre-market edge. Every trading day, I'm Tanmay Kurtavoti, Season 2, Episode 16, Sensex Weekly Expiry. Let's go. So Gift Nifty this morning, 24,005, down almost 90-95 points from yesterday's close. That's nothing. Pullback after an 874 point rally that we saw yesterday. The market is digesting, not reversing. US markets, S&P was up by 2.51%, Nasdaq was up by 2.8%, Dow was flat. Europe was massive. DAX was up by 5%, CAC was up by 4.3%, FTSE also 2.5%. The ceasefire rally went global. Asia this morning, some profit booking is seen. Nikkei is down by 0.5%, Hang Seng is down by 0.5%, Kospi is down by 1%. After yesterday's 5 to 8% surges that we saw across the globe, this is completely normal. You don't go vertical 2 days in a row. Now, here's what I'm watching closely today. Crude bounced, Brent at 96.78, up 2% from yesterday's crash close of 94.68. MCX crude is trading at 88.60, basically flat. Is this a dead cat bounce or is this the ceasefire fading? So keep this in mind for the sector discussion going ahead. So dollar index is just below that $100 100 mark and it's trading at 99.08, back above that 99 level. Yesterday it had broken below the 99 level for the first time in weeks. Today it's reclaiming it. That's a mild headwind for rupee and emerging market flows. Gold internationally is trading at 47.23, basically flat. MCX gold at 1,51,619, down 157 points. Silver at on MCX is trading at 2,39,894, up almost 4 points, 3.69%. Interesting outperformance there. Now let's move to pro FIs and clients position. This is the story today, and I need to pay attention because what happened yesterday in FNO data is the kind of thing that only shows up few times a year. Pro traders they flipped. 2 days ago, pro traders were sitting on 37,000 long puts hedged cautiously. Yesterday, they dumped those 37,000 and went 28,000 short puts on the net side. That's a full flip from defensive to aggressive bullish. When I say short puts, pros is now selling puts, meaning they believe that their markets won't fall. They are collecting premium and betting on the sideways to top up. So pro flips first, always watch pros. So FIs covered around 32,000 contracts, future contracts in one session. Net OI went from 2,59,000 to 2,27,000. That's the biggest single day cover in season two, what we have seen. They also bought 5,000 crore worth of index futures in the last 3 days. FIs have been a net buyer of 10,000 crore in derivatives. April month to date is now standing at 5,187 crores in the derivatives from FIS. For context, March was roughly a short 1,76,000 crore on the derivative side by FIs. In April, they have turned positive. But here's the thing, they are still short 2,27,000 contracts on the future side. That's massive. At 2,68,000, we hit the peak 4 days ago. They have covered 41,000 contracts in 2 days, but 2,27,000 is still one of the highest net short positions we are seeing in couple of weeks. The covering isn't done. Now let's move to clients. Client closed around 1 lakh short put contracts. Now remember, short puts are long delta. When you are short puts and the market gaps up 874 points, you're making money. Those puts are rapidly losing value in your favor. So client wasn't getting squeezed here. They were booking profits. 1 lakh contracts of short puts that suddenly went deep in their favor and they took the money off the table. Smart exit actually. So the picture is pro flipped bullish first. FIs is being forced to cover their future short and clients took profits on the gap up. The only participant under real pressure here is FI, and with 2,27,000 still short, the pressure isn't going to go away so soon. Sensex weekly expiry is today, and let's look at some option levels as well. And the setup is interesting. Sensex straddle is trading at around 800 bucks. I calculated the implied range, and that gives us almost 1,000 point move expected. With Sensex at 77,600, the market is pricing a range of 76,600 on the bottom side to 78,600 on the upside. In Nifty terms, that roughly is 23,700 on the downside to 24,300 on the upside. Now, here's the key. IV has been falling and crushed almost 41% from yesterday's gap up. This screener is also giving us a sell IV signal. So when IV is above the model but collapsing fast, that's premium selling environment. Don't buy options on day two of wall crush, sell them. Sensex gets wall building is happening at 77,500 with massive almost 10 lakhs in OI present at 77,500. The 78,000 strike has almost 1 crore 42 lakhs of OI with a massive volume of 3 lakh 33,000 contracts traded. Put OI total was 3.86 crore versus call OI at 3.08 crore. The put side is heavier, which means support is better defined than the resistance. So support zones are 77,000 to 77,200 on Sensex. That's roughly 23,800 to 23,850 on Nifty. Resistance 78,000 to 78,200, which maps to around 24,100 to 24,150 on Nifty. Weekly expiry dynamics means we could see pinning action around the high OI strikes of 77,500 and 78,000 are the magnets to watch for. Let's move on to some sectorial view as well. So screener Sensex is currently in the buy mode. Signal triggered at 7296 T5. Projected price is 77,863. But on the sectorial side, yesterday was bank dominated. Bank Nifty was up by 5.65%. Financial services was up by 5.5%. That's where the leverage was. Today, watch for rotation. If banks consolidate, the rally broadens to mid cap and IT, especially with dollar index bouncing back above 19.9. Weak dollar beneficiaries might give back some gains. Energy is one to watch for today. Crude bounced 2% overnight. Yesterday, ONGC and Coal India and energy names were the only laggards in the rally. If crude continues recovering, those names get a relief bounce. If crude feedbacks, the ceasefire trade continues and oil consuming sectors keep winning. So TCS result is today. This is earnings season kickoff. How TCS guides on deals, wins, and discretionary spending will set the tone for the entire IT pack. That matters more than any single number. So quick education point: why day two after a gap up is often better for selling premium than day one. When a massive gap up happens, like yesterday's 874-point rally, IV spikes first, then collapses. On day one, volatility is still elevated because the market is pricing uncertainty. You have wide spreads, higher premiums, but also high risk of reversal. Selling into that is risky. Day two is different. IV has already dropped. The gap has been absorbed. The market reaction to the reaction is priced in. Now premiums are still somewhat elevated, but the wallet move is behind you. That's when you sell, when the premium is above fair value, but the real volatility is declining. Today's Sensex straddle at 800 with IV at around 21. That's still rich, real relative to the realized wall. This is premium selling sweet spot for today. My view for today: buy on dips, sell volatility. GIFT Nifty is barely down. Asia is taking profits, but that's normal. The structure hasn't changed. FIS is still massively short and being forced to cover. Pros has already flipped to bullish. The straddle says that the market is pricing around 1,000 point swing on either side, but I think the actual realized range will be tighter because wall is being crushed. So key watch 23,800 on Nifty is your dip buy zone. Below that, something has changed. About 24,100, you are in a new territory for this move, and FIS covering could accelerate. Sensex 78,000 is the call wall to keep a watch on. So quick scorecard yesterday. We went long gamma, and a day before yesterday as well we went long gamma. So we have been on the right side of every major move in this season. That's not luck, that is data working. RupeeCase Nifty portfolio was interesting yesterday. Uh, but yesterday the laggard came because the benchmark Bank Nifty drove the rally and almost 5.67%, and our portfolio is equal weighted across 10 stocks, not bank heavy. Sriram Transport Finance was the star at 10% on weekly gains. Coal India gave back almost 2.5% because crude was crashing, hurts the energy bucket as well. That's diversification working as designed. You don't get all the upside on the bank driven days, but you don't get blown up on bank down days either. Track it live on rupeecase.com. So that's your edge for today's Sensex weekly expiry. FI is still massively short, and the wall crush is your friend. If this added value, guys, share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, or stream it immediately on rupeecase.com. I'm building RupeeCase India's systematic investing terminal. Link is in the show notes. You just got earlier See you all tomorrow once again.